Our man Jeremy put together his thesis video on why he thinks Dropbox is going to be the next big thing. So in today's video, I wanted to share my own 2 cents about why I think he might be wrong and some other things for us to consider moving forward here.
I can never remember what the dang penguin is, okay?
If you don't know, Dropbox is a really big cloud storage company. Here at my company, we've used it for a long time, but even before that, I was using it personally. Millions of people around the world use it personally. It came out in 2017 and was one of the first big cloud storage solutions. Dropbox started out with a freemium adoption model, which basically means you can use a bunch of the features for free, but if you want even more features, even more storage, then you just need to pay a small fee and then you get access to even more. They grew to 500 million subscribers in 2019 with a revenue of $1.6 billion. First, I wanted to start out with some of my thoughts on their strong points and things they really got going well for them. And then I'll jump into some of the weak points or some of the concerns that I think we really need to take seriously as investors or potential investors going forward. Since Dropbox was one of the first big cloud players, they have a really huge user base, about 500 million people right now. And that's really big motivation for a lot of other services, recently Zoom, but also Slack and many other services to partner up with Dropbox and offer integrations. At our company here, we also use Slack, and it makes it really easy to just, in our ongoing chat with the team, just drop in like a 2 GB file or something like that, and then people can just grab it off Dropbox and see what's going on. It's also really easy to sign up. You just sign up with your email address, and then for free you get access to 5 GB of storage. It works super easy on pretty much any phone, almost any operating system, including the Penguin guy. And as a result, we've seen really strong growth in the last few years. Every quarter since they went public, they've posted a profit too. And it's not just a profit, it's like an earnings beat too. So there are analysts saying, we think Dropbox is probably gonna make this much. And they all agree and say, okay, yeah, they're probably gonna make 10 cents. And then Dropbox will come out with an earnings beat or an earnings surprise and be like, it wasn't 10 cents, it was like $5 or something like that, you know? And so every quarter Dropbox does that, which is a really good sign when you're looking into stocks you want to be investing in for the long term. To go in some of the details, second quarter revenues, 467 million, which was up 16.4%. They also saw a big increase in the number of HelloSign users. HelloSign is a service that Dropbox recently acquired, which basically allows users to be able to sign documents over their computer. So you don't have to mail stuff back and forth and waste all that time. More and more, especially with teleworking on the rise recently, being able to do that and handle official business over the internet is going to be more and more key for efficiency. In the second quarter, Dropbox had 15 million paid users, up 10.3% from last year. But this growth rate does continue to trail downwards. Additional gains, the average revenue per user was up to $126 per year, which is up 5.3% year over year. Their non-GAAP operating margins were 20.6%, up from 10.1% last year. Additionally, for third quarter estimates going forward here, coming up in a few months, we'll see the results of these, but Dropbox is expecting revenues to go up to 481 to 484 million, a roughly 13% increase year over year. And also, they're expecting their non-GAAP operating margin to be in the range of 17 to 18%. One of the really interesting moves Dropbox made back in 2016 was switching all of their servers off of Amazon Web Services. In 2015, their gross margins were 33% because they were paying Amazon so much to use their services. Fast forward up to 2019, and they've bumped that gross margin up to 75%. And that's largely due in part to getting off of Amazon Web Services. Additionally, also wanted to mention the forward PE of 25, which is really low for a potential growth stock in the tech sector like this. A lot of their competitors, looking at DocuSign and even Microsoft and Google and Amazon and Apple and all these companies have much higher PEs. So I think that's one of the really attractive things about Dropbox as an investment right now at this moment. Going into some of the weak points and some of the things we need to consider if we're going to be investing in Dropbox is the fact that a rising tide raises all the ships. I think one of the big reasons for Dropbox growing so rapidly, especially in these last kind of 5-6 months, is because of the pandemic. We're also seeing similar growth with basically all different kinds of tools that help you network from home or have meetings from home. One of the tricky things though about Dropbox's whole core of their model is that cloud storage is starting to be commoditized. And that means, in the same way if you looked at like bananas you go to the store and there might be a couple of different brands of bananas, but none of them are gonna be like 3 or 5 or 10 times more expensive than the other ones. Because in most people's minds, a banana equals a banana equals a banana. In the same way, you look at storage online, cloud storage, and you're like, if I get 5 terabytes, I don't care if it's on Dropbox or Microsoft OneDrive or Google Drive, maybe even Apple iCloud or things like that. And so I feel like they may be starting to lose their edge because, yeah, they were the pioneers, but now a lot of other competitors have much more appetizing options available. Here's the Microsoft Office plan. Check it out, 100 gigabytes for $2 a month, or 5 gigabytes for free. And then for those who are interested in using Microsoft Office, we have a couple different plans here, 70 bucks a year or 100 bucks a year, plus a terabyte or 6 terabytes of storage. Additionally, let's take a look at Google Drive. They have, sorry, these prices are in yen because I'm in Japan, 15 gigabytes for free, or 100 gigabytes for basically a little over $2 a month, or 200 gigabytes for $4 a month, or 2 terabytes for about $12 a month. So when we're looking at Dropbox as primarily a cloud storage option, there becomes a smaller and smaller difference between some of its bigger competitors. If you're looking at Microsoft or Google as competitors, there's very little you can do to stop them. Dropbox has been trying to differentiate itself a little bit more. I mentioned earlier with document signing features. They also released Paper recently, which is basically like an Office suite type thing. And then they also released Showcase, which is basically kind of like a PowerPoint type thing. And these are little productivity things that might make it easier to work within Dropbox. But as I mentioned in my Microsoft video that I made a little while ago, one of the really crazy things about Microsoft's business model is that they still have 146 million paid Office 365 subscribers who are paying like 60 or 70 plus dollars per year. And Google came out with their whole Office suite and it's free and there's storage on it, and there's still 146 million people that are willing to pay Microsoft to use their Office suite. So that shows you just how sticky their ecosystem is. And I know Dropbox is just trying to offer these things as a defense to keep people from leaving to those services, particularly Microsoft's offerings start to become more affordable and also more generous. I think it's gonna be harder and harder for Dropbox to have a good sales point. Another really interesting fact about Dropbox's business model right now is that, yeah, they have 500 million subscribers, but only 14.6 million of those are willing to pay, which is like 3%. And getting somebody to switch from being a free user to being a paid user seems to be their biggest challenge right now. And when you're choosing companies to invest in, you want companies that are making money. You don't want companies that are just giving away services for free all the time. Another interesting factor to look at in that regard is that only 30% of the paid users use business accounts. Apparently, more than 80% of the actual users are using these things for business, but only 30% of them are willing to pay for that. So that basically means there are a bunch of people who are like, yeah, 5 gigabytes is enough to run my business on. And it's cool because it's free. Awesome, thanks Dropbox. And so Dropbox isn't making any money off that. How can Dropbox transition it to get people to be paying? That's the challenge that they have. And so when they're confronted with these huge dominating enemies that are kind of stepping into their territory, how can they differentiate themselves? Yeah, they're starting to offer Paper and Showcase and things like that, but are those services enough to get people to start paying? I'm pretty sure they're not enough to bring people who are already paying those competitors to them as well. So what's my conclusion for this video? Are you thinking about buying? You know what happens when Jeremy makes a big video about buying a stock? The stock goes up. So if you bought it, like right now, you're probably gonna make some money. Actually, probably over the coming months, you're probably gonna make some money. I don't think Dropbox is a bad company. Again, we use Dropbox. I wouldn't be surprised if they start to shift some of their offerings and if they start to be more aggressive in offering even more storage and things like that. I feel like just the ease of use, how it's basically integrated into the OS, and basically you treat it as if it's any other folder. You can easily copy and paste files in and out of it. It's really quite easy to use. I don't think my company is soon going to switch over to OneDrive or anything like that. That being said, I don't know if they'll be able to keep growing at these double-digit rates for the coming years, 5 years, 10 years, things like that. It's also possible that Dropbox might get acquired, it might get bought out by somebody in the coming years, but with competitors like Google and Microsoft offering arguably superior services and Dropbox not offering anything that's like totally unique or has a really strong moat, it probably isn't even worth their time to acquire them. So with their basically non-existent moat that's getting even more and more non-existent over the months and over the years, I'm hesitant to invest in them as a long-term investment. I wouldn't be surprised if they're growing, especially because they're kind of cheap right now and their PE is really low. I wouldn't be surprised if they're kind of growing over the next, 6, 12 months, things like that. This is probably not the kind of stock you want to go and dump like 80% of your account into, thinking that you can just go retire off of it in 30 years. So that's my 2 cents. Hope that was helpful for you. I'd be really interested to hear your comments, to hear your thoughts in the comments section. Feel free to join us on Reddit for some discussion as well. Looking forward to hearing from you guys soon. Have a great one. Can somebody tell me who that penguin thing is? What is that penguin thing, man?
Can somebody tell me who's this penguin guy? What's up with the penguin? There's a penguin in here, guys. Somebody tell me who this penguin is. What's with the penguin?
なんだっけあれ？何？